At 9:30 in the morning, a billionaire walks into a bank. Not to deposit money. To borrow it. The security guard already knows his face. The manager stands up before he even reaches the desk. There is no paperwork chaos. No credit checks. No awkward questions about income. Instead, there is a handshake. And within minutes, the billionaire walks out with a loan so large it could buy a small company. Now pause here. Because something about this should feel wrong. Why would someone with hundreds of millions, sometimes billions, borrow money at all? Why not just spend their own cash? The answer is not greed. It is structure. And once you see it, you start noticing it everywhere. This is not a loophole. It is the system working exactly as designed. Let's start with a simple idea. Cash is expensive. Not in the way people usually think. Not inflation. Not prices. Expensive in opportunity. Because in the world of the ultra-wealthy, money is not meant to sit still. It is meant to move, grow, and compound. Take a billionaire who owns $2 billion in stock of a major company. If they sell even a fraction of it, two things happen immediately. First, they trigger taxes. Sometimes hundreds of millions in capital gains. Second, markets notice. Investors panic. The price can drop just because the owner is selling. So selling is costly. Sometimes brutally costly. But what if they still need cash? To buy a mansion, a private jet, a sports team, or simply to invest somewhere else? This is where borrowing enters the story. Instead of selling assets, they borrow against them. It sounds simple, but it changes everything. Imagine your stocks are like a gold vault. You don't open the vault and sell the gold. You go to a bank and say, "Here is the gold, lend me cash based on it." The bank agrees, because the gold is stable and valuable. Now you have cash, and you still own the gold. This is called asset-backed lending. And for billionaires, it is a financial superpower. But here is where it gets interesting. Let's say the billionaire borrows $100 million at a low interest rate, maybe 3 or 4%. Meanwhile, their investments are growing at 8, 10, sometimes 15% annually. They are effectively paying cheap money to keep making expensive money. The gap between those two numbers is where wealth expands. Quietly, consistently, almost invisibly. Now compare that to selling assets. Selling means losing future growth. Borrowing means keeping it all intact. This is the hidden math that most people never see. But there is another layer. Taxes. In many countries, including the United States, you do not pay taxes on borrowed money. Loans are not income. So while a normal person earns, gets taxed, and spends what is left, a billionaire can borrow, spend, and delay taxes indefinitely. Not avoid them. Delay them. Sometimes for decades. This is where public perception starts to split from reality. Because from the outside, it looks like free money. But inside the system, it is carefully managed risk. Banks do not give these loans blindly. They require collateral. They monitor asset values constantly. If the billionaire's portfolio drops too much, they can demand repayment or more collateral. This is called a margin call. And it is not friendly. Even billionaires fear it. There are moments in history where fortunes have been shaken because asset values dipped at the wrong time. So even though the system looks smooth, there is tension underneath it. Constant tension. Now step back and look at the irony. The richest people in the world rarely cash out their wealth. In fact, if they all tried to sell at once, the system would shake. Prices would collapse. So instead, the financial system evolved a workaround. Don't sell. Borrow. Keep assets growing. Keep liquidity flowing. On paper, wealth stays in motion without ever fully stopping. But this creates a strange illusion. A billionaire might be worth $10 billion. But they may only have a small fraction of that in actual cash. Most of it is locked in assets, stocks, equity, real estate. Which means their lifestyle is funded not by spending wealth, but by borrowing against it. And paying interest on it. So here is the uncomfortable truth. Many billionaires are not spending their wealth. They are renting it. Now zoom out. Because this system is not just about luxury. It is about power, control, and timing. Borrowing allows them to act fast. Buy companies before competitors. Move into markets instantly. Avoid liquidation delays. In finance, speed is advantage. And liquidity is speed. But there is a second layer most people miss. This system works only because of trust. Banks trust that assets will remain valuable. Markets trust that owners won't panic sell. And the system trusts itself to stay stable. If that trust breaks, everything tightens. Credit shrinks. Loans disappear. And even billionaires suddenly become very cautious. We have seen versions of this during financial crises. When asset prices fall sharply, borrowing capacity collapses. And suddenly, wealth on paper feels very different from wealth in reality. Now the contrast becomes clear. For ordinary people, wealth is income minus expenses. For billionaires, wealth is leverage. It is how much they can borrow without breaking the system. This is why two people with similar net worth can live completely different financial realities. One is constrained by salary. The other is constrained by credit lines. And yet both depend on systems that can change overnight. So we return to the bank. The billionaire walks in, borrows millions, walks out in minutes. No drama. No hesitation. But behind that simple moment is a complex architecture built over decades. Tax codes. Market liquidity. Banking risk models. Investor psychology. All quietly aligned to make borrowing easier than selling. And now the uncomfortable question remains. If wealth is mostly locked, leveraged, and borrowed against, then what does being rich actually mean? Is it what you own? Or what the system allows you to do without breaking?